Hi everyone. So in this video, we look at how to play the short term, medium term, and the long term trades that we take, or let's say investments. And why is it important? Because a lot of people get confused as to what exactly are they doing. Like they sell something after 20% gains and later realize that the stock has gone up 100%, 200%. So how do you make sure that you make the best use of that thing and also play it until the rally lasts, right? So we look at these three terms and how and when to use them in the market with some examples as well. So first, let's understand what exactly they are. So when you take a short-term positional trade, it is usually for a few weeks, few months also, right? So it is purely on technicals. The fundamentals don't really matter there because you're not going to hold that stock more than few weeks or few months, right? So it is going to be purely technical, plus you can use the accumulation distribution data to know when to get in and also when to get out of these positional trades. So these are basically for short term, and one can expect somewhere close to like 15 to 25, 30% when that swing, short term swing up move happens. You can make something close to that and then exit, right? So you're basically trading these stocks for a shorter period of time, trying to make that 15 to 30 odd percent kind of returns, right? Then comes medium term. So medium term is usually for few years, right? So you have market cycles which I'll be discussing. I'll be showing you examples also, which kind of last for 3 years of bull market, then 3 4 years of bull market, then 1.5 year of bear market, right? So basically, there you would want to play that full 3 or 4 years of bull market, wherein the rally lasts, stocks go up like 2x, 3x, 5x, sometimes 10x also. So how do we play those? So those we kind of combine technicals with fundamentals. Fundamentals are important because to hold something or to know which are those best stocks which can give you the 5x or 10x kind of returns, fundamentals are important. So you combine both technicals and fundamentals with the market data and cycles to kind of play these medium terms, right? So here your horizon is for, let's say, the next 2 3 years, and then you play these, right? And then comes long term, which is purely on fundamentals. Technicals won't make much sense here. Why? Because see, every stock goes through a period where it corrects 20 30 40% also. So stocks which have become 100 baggers also have gone through a phase where they corrected 20 30 40%. So if you are going to play them on technicals, what is going to happen is your stop loss is going to get triggered. You are going to get out of that stock, right? And once you get out, usually very few people kind of again get back in the same stock once the up move happens. So that is the reason. So if you look at Mr. Buffet and all of those, they never really used technicals to play their long term. So what they actually look for is great quality. That is all the fundamental points. And what you can do is you can average up using these cycles and the data, right? So because you're playing it for the next 10 years, 15 years, 20 years, you would want to continue your SIP in the same stock whenever you see that the, okay, now it has kind of cooled off, the cycle has again started moving up, the data is also good, you can continue your SIP and average them up. All right. So this is how basically you would be playing these three different trades, that is short, medium, and your long-term trades or investments. All right. So once this is clear, we'll just look at how they look on the chart. So this is more of a medium term graph that I've downloaded. So there, the blue line that you see, the main one on which the zigzag line, another black color one is kind of moving up and down. So that zigzag line, you can call it the short term. The main blue line, you can call it the medium term. So in the medium term, what happens generally, let's say this uptrend is for 3 odd years. So what happens usually, the cycle starts and then the market starts moving up, right? And on that, you have a zigzag short term up and down movements on a medium term up move. All right. And then it kind of makes a top after 3 years and then it starts cooling off, right? So this is what keeps happening in the market every 3 4 years. This cycle keeps on happening, right? So this is basically for your medium term. Now, the same thing I have put it on the chart. This is like a rough diagram that I've made. So if you take the thick black line as your long term, wherein the market continues to move up, this can be decadal up move, wherein it can be for 20 years, 30 years, 40 years, right? I'll show you Nifty and the small cap chart also, how if we had invested in the same for, let's say, 20, 30 years, we would have made solid returns in them. So if the long term trend is up, in that medium term, you would have again swings wherein the market moves up, the market corrects 20, 30, 40, 50%. Again, it goes up, let's say 2x, 3x. Again, it corrects. So that keeps on happening every that 3, 4, 5 year cycle that keeps on happening. But on that same medium term, like I showed in the previous chart, there are going to be again short term trends wherein the market moves higher, market again corrects, market moves higher, right? So it depends on you what exactly you are trying to make out of the market, right? So you have to decide it. No one will decide it for you. If your goal is to make like so much money after 10 years, you can go with long term, right? So if you're going with long term, what exactly matters, we'll discuss that later. But let's say you are someone who wants to make decent money for the next 3 years and then sit out of the market for like 2 years when the markets kind of cool off, right? Then you can play the medium term, 3 years you get in, then again you get out, again get in, right? If you are someone like a trader who wants to play stocks for short term, so what you'll do basically is kind of get in, make that 15, 30%, whatever returns you get in that short term period, get out of the market, get out of that stock, look at other names where the data is good and which look good on the charts for short term. So that is what you'll do. So now looking at Nifty long term. So this is the Nifty long term charts, almost 35 years, right? So if you look at it, continuously we are moving up, right? So irrespective of where you would have put money in the Nifty, you would be in money as of today. Yes. But if you look at that, this is a monthly chart. In between, there were times when Nifty corrected a good 30, 40, 50, 60% kind of a correction Nifty went through, right? So if you are a medium term guy, you would want to get out during that phase and again get in at around the bottoms. But if you're a long term guy, you can just rely on the fundamentals and play it for the next 20, 30 years also, right? So this is Nifty. Here the volatility is not that high, but let's say you look at the small cap index for the last 20 years. Here the volatility is crazy. The moves are also like a very strong up move followed by a very strong correction as well, right? So this keeps on happening, especially in small and medium cap stocks, right? They are more volatile and they go up like crazy, they correct like crazy as well, right? So that is the reason it makes a lot of sense if you're a medium term guy to kind of exit these small and medium mid caps once they hit some kind of a top, and once they correct that 20, 30, 40%, you can again re-enter them looking at how the data is and also the valuations, right? So in conclusion, so short term, you can play it either in a bull, bear, or a sideways market. So you get in using the data and technicals, and you get out once the technicals become weak and it shows distribution. Medium term, you combine it with the market data, that is the market cycle, and technicals and fundamentals both play a decent part here. And you play for a few years, you can make from 2x to 10x, like most of the stocks in the last 3-4 years, right, have gone up even 5x, 10x also, depending on how strong the rally is in that particular sector. And in long term, you rely on fundamentals and valuations, right? Technicals don't make much of a difference here, and you play them for 5, 10, 20 years. And all these stories that you have heard where most of these HNIs like Mr. Vijay Kede and all of them have made decent money. So they played it for 15 years, 20 years, where they made 50x, 100x on their stocks. So one example was Sarah Sandstream, where he made almost 100x kind of a gain sitting on it for almost 10, 15 years, right? So this is how you have to make up your mind as to what exactly you want to play and then play that, right? So you can't compare yourself with a medium term guy saying that, okay, the medium term guy has exited, but in the short term, the stock is moving up, right? So medium term guy has to take into account the valuations and the market cycle and then play it, right? So don't combine these things. Okay, if you're a short term, you can play whenever you want. If you're a medium term guy, you have to take into account the valuations and stuff. If you're a long term guy, then you can continue being invested, and as the country grows, even these stocks will grow, you will make decent money in most of them, right? Hope this helps, brings in some clarity as to how you should tackle the markets, and also not compare with others investing or trading style, because that will not help you, right? You have to be clear as to what exactly you want from the market and play it accordingly. Hope this helps. Thank you.